Hey, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. 5 minutes on the clock, arguing with idiots in trading. How can I keep this to 5 minutes? Recently, I've been bombarded by scalpers. To be able to put it bluntly, scalpers trading in a simulated account, and what they don't understand, buy stops, limit orders, and all the other things that go with it, and the negative slippage. You're not going to get positive slippage in the account. You're not going to get filled at the price. It has to push one tick higher normally than where you want to get out of the markets. For instance, I think today, if I'm not mistaken, one of the guys that was in the room, or gal, I don't know, it was talking about, I think it was going 3 or 4 ticks with 5, 7 going against it. So risking 5 to 7 ticks, going after 3 to 4 ticks. That's kind of vague, to be honest. So there's no plan behind this other than that what I can tell you. You put that in play into a real funded account, what's going to happen is you're going to have negative slippage. So for instance, let's say you wanted to get in today. Right now it's trading 62. The range right now is 62.20, 62.15, for instance. So you say, well, I want to be in at 62.21. If that market pushes up to 62.23, then you're probably going to get filled at 62.23. You're not going to get filled at 62.21. Now, if you got a buy stop order and you're coming at it and you want to be filled at this level, it'll probably fill you maybe a little bit lower or a little bit higher, depending upon. It doesn't normally, your buy stop does not, well, let me rephrase that. A buy stop that pushes lower, it will fill you at wherever your market price was. It won't fill you at the lower price. So sometimes it will, sometimes it won't. But for the most part, the buy stop order is going to that stop becomes a market order. Very seldomly do you get where you want to be at market, because there's a concept called bid ask. So I'm trying to be as polite as I can about this situation, trying to take out 3 to 4 ticks a trade, risking 5 to 7. It's going to, if your buy stop gets hit, it automatically becomes a market order, and it's going to get filled. If it runs a little bit lower, it's going to fill you a little bit lower. So if it's 15 and it runs to 13, most likely you're going to get filled at 13. You're not going to get filled at 15 or 16. You're not going to see these positive slippage in a real funded account. Your limit order that you have, your limit order plus your slippage will be where you get filled at. For instance, if I have a limit order right now at 20 or 15 and I have a 3 tick slippage that I'm willing to accept, what I'm telling the market at this point is I'm willing to accept to get in at 15, 14, 13, or 12, 3 ticks, or whatever you want to do with that. If the next print after it hits 15, 16, and the next print from 16 is 11 or 12, and I have a 15 limit order, it's not going to fill that because it went and jumped through prices, right? So that's the power of the limit order. So it should not fill you. A true limit order should not fill you if it pushes past your price. So that's the power of the limit order. But if you have a buy stop sitting in a market, it becomes a market order. So for instance, you have a buy stop at 21 and the next print's 30. Well, guess what? It's going to print you at 30. So that's the way it's going to really work in a funded account and with real money. So you think that you're going to get 3 or 4 ticks, and you can work this out to a complete science, and that's wonderful. But you're still going up against the algorithmic traders and that have the computerized program that's already in play. So unless you have that kind of talent, and I've watched videos on people that have trained a computer to be able to be AI, it's called right now. That's kind of a cool concept. If you have that kind of power to be able to, not power, but the smartness to be able to put a computer in every one of these computer AI programs I've seen that come out it's a learning curve. So when we're taking on, like, say 5 trades a day, they're taking on like 1,000,000 trades a day. So they're going to learn a lot faster, the AI, right? So there is some benefit in some of the stuff that I see that's coming online. But with that being said, my 5 minutes are up. I just want to caution those are out there that think that scalping is the paradise that you believe it is, and I want to nip that in the bud the best I can. Now, as far as my trading room goes, hopefully I'm gonna connect up the old router next week, and what I can tell you about my room, it's my room. I'm not going to allow people to just call out trades in the room anymore. And if you're going to start doing that kind of crap, because it does affect my breathing, and it's my trading room, it's not yours. You're not there to prove anything. If you can trade, go for it. If you believe your system works, go for it. Personally, the only way you're going to find out if it works, and I challenged the person in the room today, that open up a $5,000 account and try that in a real money account. What are your comments? What do you think? And I'm just, bottom line, you're going, what I look at, 3-4 ticks with a 5-7 tick loss, and over and over and over, and thinking. So you're thinking. All right, let's just put it in bluntly. Let's say that you do get it at 21. Let's just say you get 21 and you have a 3 or 4 tick profit target. All right, so let's just say you've got to determine, you can't just say I have a 3 or 4. You have to say I have 4 ticks. So yeah, it goes 3 or 4. I see what the game you're playing, right? Because it's a game. You're playing a game with your own self right now. You're not being true to your own self. So what you first got to do is determine what your profit level is that you're going after. For instance, let's just say you're going after 4 ticks. You get it at 21, the market goes 4 ticks your favor. But do you understand, in a real funded account, in a real money account, that market's got to go 1 tick higher more times than not to get you filled at the level that you think you're going to get filled at? Did you know that? Do you know these little things? And that's the way it works. Just because the market goes to your level doesn't mean in a real account that you're going to get filled at that level. It's just the way it works. It's usually got to push through 1 extra tick above or below where you have that stop in, and because it's just the way the orders are set up, right? It's got to get through that level. All right, Dave Knight here from 123daytrade.com. I hope you found this informative. I wanted to kind of nip some stuff in the bud, things that I believe are dangerous as far as real money account trading. And I believe that if you have your plan and you can prove it in real money, then go for it. But until you can make something work in a simulated account. You can make a lot of things work in a simulated account. In fact, in the inventory strategy, I could just bracket out the market and let one side run and the other side run, and I could make myself look like, wow, look at this guy. Because it would fill me in a simulator. It'll fill me basically, let's say, it will fill me where that mark, it might give me the next tick from there might be a lot lower, so it'll fill me, and then maybe that next move up there that you could really get filled is 30 ticks higher from that. So a quick moving market, you really don't know when that order, if you've got a market order out there, if you got to buy a market order out there, you're taking, if the next print from there is 10 ticks over where you think, well, you just got filled there. All right, enough. 9 minutes, 5 minutes turned to 10 minutes. Bye for now.